Welcome to Sethtra Academy, where we uncover the invisible systems that build global wealth. Most people think money comes from banks. But what if I told you the most important loans in the world aren't made by banks at all? They're made behind closed doors, through private contracts, between billion-dollar funds and companies you've never heard of. This is the world of private debt, where quiet capital builds loud empires. Private debt is simply money lent outside traditional banking systems, directly from investors, funds, or wealthy institutions to businesses that need capital. Think of it as the bridge between banks and the stock market. When a company can't or doesn't want to borrow from a bank, it goes private, borrowing from funds that specialize in flexible, high-yield loans. It's faster, more profitable, and often far riskier. But here's the secret. While the public talks about stocks, the rich talk about debt. Because debt, when controlled, builds ownership without making any noise. Let me tell you a story. Imagine a medium-sized factory in Vietnam producing eco-friendly packaging. It needs $10 million to expand. The banks say no, it's too risky. Stock market investors say no, it's too small. But a private fund says yes. They lend the money with a higher interest rate, but on flexible terms. In just 3 years, the factory triples its production, repays the loan, and expands across Southeast Asia. That's private debt in action, the silent force that fuels growth when traditional systems hesitate. Over the last 20 years, private debt has exploded from a niche market into a $1.7 trillion global industry. After the 2008 financial crisis, when regulators tightened their grip on banks, corporations turned to private lenders, hedge funds, pension funds, insurance companies, and ultra-wealthy investors. Why? Because private lenders move faster. They don't need government approval. And they often understand risk better than bureaucrats. This new shadow credit system now funds everything from infrastructure projects in Asia to technology startups in Silicon Valley. In every economy, there are two kinds of power: the one that owns and the one that lends. The owner controls production, but the lender controls leverage. Private lenders don't seek fame. They seek influence. They prefer quiet power, the kind that collects interest while others are chasing headlines. As they say, money talks, but debt whispers, and it still gets everything it wants. Here's the great irony: even governments borrow from private funds. From U.S. infrastructure bonds to Southeast Asian development loans, private debt funds step in when public financing slows down. These funds often end up shaping national projects, dictating repayment terms, and even influencing public policy. It's no longer about banks lending to governments. It's about private wealth lending to nations. That's why the richest people today don't compete with banks. They replace them. Here in Cambodia, traditional banking serves only a fraction of the economy. Small and medium enterprises, the real drivers of growth, often can't access bank credit because of strict collateral rules. That's where private lending steps in. Family offices, local investors, and development funds providing flexible loans to businesses in agriculture, real estate, and manufacturing. If structured responsibly, private debt could become the backbone of Cambodia's industrial expansion. But if abused, it can create bubbles and silent bankruptcies. It's a double-edged sword that demands wisdom, not just capital. The good news is, private debt isn't just for billionaires anymore. Today, ordinary investors can access private credit funds through global platforms, ETFs, or specialized investment vehicles. But remember, these aren't savings accounts. They are strategic instruments. They require patience, risk assessment, and a deep trust in management. Still, the returns are often double what banks can offer, because where banks fear to go, private money grows. We live in a loud world, but true wealth is built in silence. While the public debates prices, traders, and hype, private lenders focus on cash flow, collateral, and control. They don't need fame, they need structure. Because true wealth doesn't shout, it compounds quietly through contracts. The real kings of the modern economy don't sell shares. They write loans. The age of quiet capital has begun. And those who understand debt, not as a burden but as a tool, will dominate the next financial era. At Sethtra Academy, we teach not just how to earn, but how to lend, leverage, and lead in silence. Join us. Learn how the quiet giants of private debt are shaping the world you live in, and how you can become one of them. Thank you for watching, and be sure to subscribe for more insights into the world of real wealth.